All right, so today I wanted to talk about backtesting and knowing your edge a little bit. I spend a lot of time backtesting myself because it gives me a lot of confidence in my trading and it confirms if my strategy has or at least had an edge in the past. There are a lot of different ways you can backtest and it really depends on the way you trade. But it is important to find the right way to backtest your strategy, otherwise the results will be meaningless. If you want to learn more about how to properly backtest, you might want to check out my website. It's in the description below this video. All right, so what we are looking at here is a backtesting project in the euro dollar. And as you can see, it's quite a big project. This is just one tab, and I have a lot of different other tabs where I tested a lot of different confluence factors. And I use these to increase my risk when the odds are in my favor and decrease the risk when the odds are less in my favor. And that's basically what I do. I do it for all the pairs I trade. I trade mostly a mechanical strategy, but I also do add some discretion. So what you see here is the backtest results of the mechanical portion of my strategy, because discretion is not possible to backtest. You can only test it by live trading and journaling, which is what I'm doing right now. So this is these are the results of the backtesting and a lot of confluence factors. But the thing I want to show you is this. And this is basically the total R made during the entire backtesting period on this pair. As you can see, I backtested all the way back to 2008, so there's more than 10 years of data, which in my opinion is enough to confirm an edge. The sample size is more than 100, so it's a decent way to backtest. But I want to show you that, as you can see, the drawdown was 5R, which is not a lot. But if we dive deeper into the graph, you can see that from trade 62 toward trade 83, there hasn't been made any new profit. What I mean by that is that there wasn't a period that we made a new equity high. Let me draw out what I mean. I'm talking about this period. As you can see, over here we made an equity high, and then it took around 21 trades before we made another equity high. So I would have been in a drawdown for 21 trades. Doesn't mean I lost 21 trades, but it means I've been in a drawdown for 21 trades. And that's very important to realize, because this strategy has around a 65% win rate. It's 65%. Most people don't even have that high of a win rate. And as you can see, I would have been in a drawdown for 21 trades, which is quite a lot. And most people don't realize that. They think if they lose a few trades or are in a drawdown, they're bad traders. But it's not the case. If you really have an edge, you have to sit through these drawdowns. And as you can see here, the drawdown was only 5R, minus 4.92% when I use compounding in my risk plan. Yeah, the downside was it took 21 trades to get out. The strategy has around 12 trades per year, which means the drawdown took around 2 years before I got out of the drawdown. And that's one reason I don't just trade one pair, but I trade multiple pairs, around 12, I believe right now, which means the chances of getting out of these drawdowns is, well, the chance really, I mean, the time it takes to get out of a drawdown is way less. So yeah, even with the fact that from trade 62 to 83, so this zone on the chart, there was no profit, at least not an equity high. In around 10 years, the strategy has an ROI of 45% when I risk 1% a trade. And this is just on one pair without adding my confluence factors, the discretionary way. So that's quite decent. And if I risk 2% a trade, the drawdown would be 10%, which is still quite decent. And the returns go to 90% in 10 years, which is around a 9% a year on average. And that's almost identical to the S&P return. So you can see this is a very profitable strategy. On this pair, I trade 12 pairs with this strategy, but the strategy is very profitable. The graph looks very nice, but there are still these periods. For example, this one took 21 trades that you would have been in a drawdown. And the question is, do you have the balls to sit through the drawdown and keep sticking to the plan, even though you're in a drawdown and you're losing money? And that's what defines you as a trader. If you cannot do it, you will never make it. And in order to get the confidence to go through these drawdowns, you need to know your strategy inside and out. You need to know all the numbers. You need to know what to expect. And that's why I think backtesting is so important. Because if I didn't have these statistics on my trading, I would have probably already quit trading the strategy. But because I know what to expect, I keep trading, I adjust my risk, and that's it. And that's what you need to do. So I want to share another Excel sheet of mine, which is the cumulative returns of 2013 towards 2019, which is just, again, the basic mechanical part. There goes a lot more into my strategy, but it's just the basic mechanical part of my strategy. As you can see, it's quite a lot of data, I believe. 415 trades, but this is on 6 pairs, I believe. And as you can see, the equity curves looks really, really nice. This is the R returns. This is the returns I would have made on a 10,000 euro account, risking 1% a trade and applying compounding. And as you can see, the deepest drawdown was only 6R, which was here. Here we had a 5R drawdown, but the longest drawdown was 31 trades. So that means it took 31 trades before I made a new equity high. And that's, let me draw it in. Here we also had a small drawdown, but this place is what I'm talking about in this equity graph. As you can see, it's only a very small part of the graph, but when you're trading it in the moment, it looks like it's forever, and you are in a drawdown for 31 trades. And in general, this strategy is very profitable. As you can see, it returns around 125 R in 6 years. That's a lot. If you risk 2%, that's 250 R without applying any compounding. So it's really profitable, but you have to realize that for 31 trades, I didn't make any money. And on general, as I spoke about earlier, I trade multiple pairs. So this would have taken me around maybe 4 or 5 months to get out of this drawdown. Strategy has a 65% win rate, but 31 trades in a row, I wouldn't make money. And if you don't know what you're doing, you will never sit through this drawdown. I don't know anyone that would be trading a strategy that he doesn't understand for 31 trades without making any money. Everyone would have ditched the strategy already. But if we zoom out and if we think about the long term, so years, not months or weeks, you can see this strategy is very, very profitable, and the equity curve looks really nice. So basically what I want to explain in this video is that it's so important to know your strategy and to know your edge. And if you don't, you will most likely make a lot of mistakes. So really take the time to understand your strategy and backtest and think about the long term, because I've had one of these drawdowns this year and it took me around 7 months to get out, but I stick to my plan. And if you can prove to yourself that you have an edge and that you can stick through your plan, during this period of drawdown, and you can get ahead of the drawdown. So for example, let me quickly draw it in. If you can get a new equity high, I really think that will give you massive confidence and really defines you as a trader. Really, if you have an edge and you can execute it during this period of 31 trades, not making any money, and get on top of it and make a new equity high, I think you can call yourself a profitable trader. So I hope you guys learned a lot. And again, if you want to learn more about how to properly backtest, you might want to check out my website, because I have a in-depth webinar about backtesting. So I check you guys later.